Welcome to Cherry Street Investor Education with Kavitha Baratakke, passive income coach and founder of Cherry Street Investments. Education that is designed for you to take control of your financial life. Join us to learn how you can create multiple passive income streams, diversify your portfolio, save on your taxes, and much more. Become a better investor and fast track your financial goals. Here's your host, Kavitha Baratakke.
Hi, I'm Kavitha Baratakke, passive income coach and founder of Cherry Street Investments. A lot of investors ask me what a syndication is or what are we doing in a syndication. So I just wanted to quickly put together this video to talk about what is a syndication, who are the parties in the syndication, and what are their roles and responsibilities, and also talk a little bit about the types of syndications that Cherry Street Investments put together. Of course, understand that syndications can be put together for any purpose, not just real estate, but we primarily focus on real estate investments. Thank you for listening and hope this is useful.
So what is a syndication? Google defines syndicate as a temporary alliance formed by professionals to handle a large transaction that would be impossible to execute individually. Really what it is that people come together, pool their resources, and then share both the rewards and the potentials, the risks and the potentials for the reward on that investment. This is ideal for people who are busy, like let's say professionals who have full-time jobs and who really don't have the time to spend a lot of time doing a syndication. Perhaps you do have the time, then maybe you should look at how do you become a general partner in a syndication. So that's something I'm open to talking to people about. So if you're really interested in becoming the actual management entity of the syndication, then that's also an option. I'll speak to this from a general syndication perspective, not necessarily a GP or LP side, but from a limited partner or what we call the person investing the money into the syndication. This is sort of like the high level 10,000 foot view of it. So let's talk about the parties in a syndication. We have the general partner. So general partner would be someone like me. We perform the underwriting for the syndication. What does that mean? It's just a fancy way of saying the financial analysis for the syndication, for the apartment or the investment we're buying. We need to make sure that the numbers work, right? So that's the underwriting. We have identification and acquisition. So by the time we buy one apartment, we probably have put 20 offers or 30 offers on apartments, right? So it's not very easy to find good properties which make sense in this hot environment. So we do a lot of research and figure out what are the good locations to invest into that we can get better rent bumps, for example, more rent for the money, for the dollar that we're putting into the property. So we also talk to brokers. We have lenders, we have investor relations. So obviously I'm talking to you guys as an investor relations person. We also have attorneys involved in the syndication. We form legal structures and we have a lot of paperwork which goes into it. This is a highly regulated industry, so we can't just willy-nilly put a syndication together. There are a lot of SEC rules around syndications that we have to follow. So it's all very legal and structured well to protect investors getting into a syndication. That said, it doesn't mean you don't do your due diligence. You should always do your due diligence on the sponsor, on the deal, and everything else you're getting into. But there is also some legal recourse that you have when you get into a syndication. We also work with in-house property management or third-party property management to perform ongoing what we call asset managers. So when I buy a 300-unit apartment, I'm not a property manager, right? I don't run the property, but we hire a third-party property manager. We manage the managers. So we make sure that our business plan is executed. We do the improvements that we plan to. We pull back on those improvements when it doesn't make sense to, like COVID. We stopped renovation on all these properties because it didn't make sense. We couldn't push up rents during COVID, right? So those are the kind of decisions which an asset manager makes. We also provide you monthly reporting and cash distributions, whether it's monthly or quarterly, on these properties. So the cash distributions come from the cash flow of the property. So it is passed on to the investor after all the expenses. We also track the execution of the business plan. So whenever we put a syndication together, the sponsor will always have a business plan for the property. Whether it's a new build, the new build business plan is, I'm going to build this apartment, I'm going to stabilize it, which means put tenants into it, and we're going to sell it to an institutional investor. Whatever that plan might look like, you always want to walk in with a professional plan that your sponsor is putting together whenever you do a syndication. We also manage the disposition of the asset, as well as the disbursement of the investor funds and capital, the initial capital that you put in, plus all the gains from the project. So who's a limited partner? So I assume most of you are here to learn about syndication. So you would be the limited partner in a syndication. Limited just means that you have limited capacity. You're working in a limited capacity in that partnership, where you put in the money. You can, of course, you can ask us questions, and you have some rights in that partnership, and the legal documents will outline all your rights, but you're not day-to-day operating the capital, operating the property. And most of our investors don't want to operate the property because they just want to put the money and have their money work for them. They don't want to be working. So that's what I mean by really passive. So you get a K1 at the end of each year. By April 15th, we send out K1s. What is a K1? It's basically a partnership legal document, it's like a 1099, but for a property, because it's a partnership. And we tell you, here is what's the income you had, here is the depreciation we are passing on to you as partners. You also receive the cash on cash distributions and property reports, and you benefit from both the cash flow and the appreciation in the property. Sometimes we structure them as a debt investor, but they're still in the equity pool. So the way it works is, it's a little bit like, think about it as, I get a flat fee, like a 10-12% return, let's say a 10% return, but it's paid out over 5 years, and you don't participate in the equity of the property, but you get paid first before everybody else. So in a sense, your returns are more, I wouldn't say guaranteed. Guaranteed is the wrong term to use, but your returns, you are the first paid on the stack. So you're likely to get paid, right? So you have the first preference on these returns, but you're still a equity investor. You're not a debt investor. So you are going to see a lot of different types of syndications. Earlier, I used to generally talk about value add syndications, where you're essentially upgrading units, increasing rents, reduced expenses. And that's what I spoke about when I talked about forced depreciation. That's called a value add play. Then you'll see what's called a yield play. When we buy a property, we don't think it needs a lot of value add. It's fairly new. It looks pretty good. We're just going to increase rents a little bit because they're under market, but mostly just keep the property the way it is. We're not renovating the property very much. Then it's generally called an yield play. You're just buying the property as is and then buying it for its cash flow. It's not possible in all markets to do yield play because the cash flow has to be pretty good. Then there's hybrid, where you might do a little bit of value add, but not too much, but there's already cash flow on that, right? Then you have the new builds. It's becoming very popular as prices start increasing, that the delta between older apartments and newer builds are narrowing every single day. So new builds start to make more sense. You have build to rent, you have build to sell. Build to rent is, I'm going to build, I'm going to have renters coming in and living there, and I'm going to possibly hold on and benefit from the cash flow of the property. The build to sell model is, I'm going to build, I'm going to tenant it, and I'm going to sell it to someone and exit the deal. Low maintenance, it's a new property, there's hardly any maintenance, and no cash flow during construction. Obviously, the first couple of years of the build, there's no money coming into the new build, right? So you have to kind of be prepared for that when you get into a new build, but the returns can be much better than existing properties. So let's talk a little bit about what an accredited investor is, what a sophisticated investor is, because people need to understand this when they get into a syndication. Like I mentioned, the SEC regulates a lot of this. The SEC says an accredited investor is someone who has earned an income that exceeded $200,000 or $300,000 with a spouse in each of the prior 2 years, the last 2 years, and expects the same, or has a net worth, or has a net worth of over $1 million, but that $1 million cannot include the primary residence. So for those of you in California with a huge expensive primary residence, you cannot include it in your net worth calculation. But a lot of people in California qualify as an accredited investor because of their incomes. Their incomes are substantially higher. So you needn't be an individual. You can be a LLC, your bank, you can be a partnership, you can be a nonprofit. So there are a lot of ways to become an accredited investor. XCC has actually expanded this definition and said there are certain types of financial professionals. I believe it's a Series 65 license. People who hold certain financial licenses are now also accredited, even if they don't meet these criteria. Who is a sophisticated investor? The SEC says a sophisticated investor is someone who understands the knowledge, has the knowledge and experience to evaluate the risks and merits. So for example, you're here learning. So you want to be able to figure out, okay, am I educated enough to make this investment, right? And you don't want to just rush in and do something everybody's doing. You want to be an educated investor. When you're an educated investor, whether you have a net worth or not, you become what's called a sophisticated investor. So no income requirements, but in each of these syndications, we have a limit on how many investors we can take in who are sophisticated. And there are certain types of these syndications where we cannot take any sophisticated investors. And I'll talk a little bit about that. So you want to be educated in investments, whether it's a stock market or similar investments. You want to understand that every investment comes with a certain amount of risks, and you're willing to take on that risk in return for the higher returns.
Hi, I'm Kavitha Baratakke. I hope you found this video useful, and if you did, please don't forget to subscribe to my channel so you can get notified of any future videos I upload. I plan to cover a lot of investor education on this channel, and I hope you'll stay with me for it. If you have any feedback on future content you'd like to see me cover, please drop me a note or a comment on my video. Thank you for watching, and thank you for supporting me.